Okay. Hello? Everyone can hear me now? Yay. All right. Okay. Um, Welcome back to another week with the No BS trading here with WPAT. Um, Before we start, I do want to apologize for the late start because of the delay on, with the technical difficulties that we had today. So I apologize for that. So today we're going to be talking about something brand new for the Forex trading, okay? And it may be something a little bit more closely related to what you guys always want to hear about or look into, okay? It's something that is very different from what we've done a few weeks before, okay? So before we actually get started, let's get through the most important stuff, okay? Forex trading is what we're going to be talking about today. It may not be suitable for everybody as it is considered a high risk investment instrument, okay? So obviously what we're doing here is purely for entertainment purposes and educational purposes only, all right? If you guys do need additional advice or professional advice about financial investments and stuff, do seek your local, agents in your local area for further advice on that. Okay, without further ado, we're going to actually dive into the no BS trading sessions of the week. What we've talked about before, we have to say it's higher hit rate. Okay, what does high hit rate mean? Basically means that there's a high chance or a higher chance of accuracy, meaning a higher chance to become more profitable, okay, on when you enter the trades and when you exit the trades. Why? Obviously, because via the strategy we were using, we are utilizing a longer time frame, okay? And because of this, I've heard a lot of people starting to say, voice their opinions, saying that, Raymond, you're always talking about long time frames. I don't have all the time in the day to actually sit down, wait for that great entry point, and then make a ton of money off of that. Or maybe I don't even know if I would make money off of that, you know? So it's a waste of my time. Okay, fine. Maybe you don't have the patience. Well, let me tell you something. In any investments, okay, you must have some patience, right? The market will actually go and take its toll. You can't really make money quick. But of course, with the no BS trading, we're not here to talk about the mindset, mentality, and stuff. There's actually a strategy for everyone and to cater to everyone's needs. Obviously, keep this in mind, okay? If we're utilizing shorter time frames, there's strategies for that as well, which is what we're going to be talking about today. So if you guys like gluing yourselves in front of a chart, then this may be for you. But if you are not someone who likes to glue yourself in front of a chart all the time and you like high accuracy, then maybe this is not for you. But never hurts to get more knowledge. Okay, so quick review of what we learned before, right? Before we talked about using D1 as your entry time frame, right? To actually go with the two indicators that we talked about, the RSI and the stochastics, right? We're not going to talk about that today. We're going to talk about a brand new strategy. After we talk about the strategy, then we're going to actually take a look at reviewing our past strategy and also trying to see if there's more opportunities with the new strategy in place. Okay, so are you guys ready? Oh, by the way, what we're going to be utilizing today is a very cool indicator. Okay, this indicator is called pivot points. Okay, so this is going to look like this. Okay, you see with all these lines. Okay, basically the blue indicates the pivot, the greens are your supports, and the reds are your resistance points. Okay, so once you actually put it in, there's a selection that you can do. Okay, what we want to do is we want to select it into the hourly pivot points. Okay, so anyways, leave your leave a thumbs up on the comments. Okay, and we will reach out to you by sending you the indicator. Okay, now okay, so yeah, don't write your email if you really worry about people getting your email on the comments. Don't do that, right? Just basically leave a thumbs up, okay? on our comments below, and we'll send you the indicators. Okay, great. Let's get right in. Today's super simple. We don't need anything else except the pivot points. Obviously, we're going to start building on top of this strategy on a weekly basis, okay? But today we're going to talk about how to sort of utilize it to get started. So anyways, the hourly pivot points basically mean that it's going to be recalculating the previous candles and get the previous candle data to jot down the pivot points with the supports and resistance. Okay. Okay. So once you're on the H1, which is something that you may not always be utilizing, okay, then you will just go down to M15, okay, which is the 15 minutes chart or time frame, okay, and it's super simple, okay. Well, a word of warning, uh, highly recommend a tighter spread account for this strategy, okay. But you do need a little bit of patience as well. This has nothing to do with scalping. Okay, this will actually be quite profitable if you do choose to follow the instructions strictly. But in the case that the markets are actually very parallel, okay, it may not be very profitable. You will only gain a little bit of profits, a little bit of losses here and there, okay? But when it becomes trendy, which is most of the time in Forex or in all financial instruments, okay, that's where the big successes will happen, okay? So, rule of thumb, let's just quickly review before we jump right in, okay? Here, this is usually a smaller spread pair. Okay, quick review. One indicator required, pivot points. Okay, leave a comment below with thumbs up. We'll reach out to you and send you the indicator. All right, and then all you need is possibly try to find tight spread accounts, okay, and find pairs that are, more popular. Okay, don't use anything like rare pairs or more, higher spread pairs on this strategy. It's not viable for you. Okay, now, for example, like Euro USD, GBP USD, Euro GBP, okay, AUD USD, these major pairs, it's great for this. Okay, all right. So let's actually take a look at the idea, the trading methodology. Okay, so for example, let's take a look at over here where my crisscross is. Okay, the blue line, this is the pivot. As long as the prices are above the pivot, okay, which is above the blue, what you want to do is it's telling us to enter into a buy. And vice versa, let's say if the prices are below the blue line, for example over here, then that's an indication for a potential sell, if you choose to do so, of course, okay? Now, this is the basics of how to enter into a trade. So, for example, right now, okay, let's say um, we see pivot is right here, okay, and our prices are technically below the pivot, okay. What you want to do is you want to enter into a sell, okay. So now we're going to start off this with a smaller lot size just for showcasing, just so then I also keep a record about what strategy we used, right? And then so we'll place a sell, okay. This is the basis of the idea. Now, what time frame do we look at, right? You look at the H1, okay? But of course, then you're going to drop down to the M15 to enter, okay? Alrighty. Now, how do we exit this trade? Well, we're going to exit when it becomes profitable, of course. Now, will we exit even if it's in losses? Of course we should, right? This is how we cut off our risk, okay? But anyways, let's not go into that details right now. Let me actually just review on how you should enter into the market. Then afterwards, let's talk about how we can exit, whether be it profiting or in losses, okay? Then we worry about that afterwards. Okay, so let's do a quick review. Let me go into another pair. GBP USD. Okay, so GBP USD. Let's take a look at where my crisscross is, a measuring tool from the MT4. Okay, if prices are actually above the pivot, then place a buy. Okay, and when the prices are below, like for example here, are below the pivot, then what you want to do is, if you choose to do so, you can enter into a sell. Okay, this is the basis of the idea. All right, now H1, why do we need H1? Well, obviously H1 is to just sort of give us the direction for the pivot points, right? So you can have a cleaner look, okay? So right now, basically, the pivot is right here. The price currently is below the pivot point, okay? And then we drop it down to M1 to confirm. And lo and behold, it is all below. So what I'll do is I'll place a sell, okay? You guys get the idea? Great. Cool. So there's a little bit more to that. It's not just about the price is below, so you place a sell. The price is above, so you place a buy. No, there's a bit more to that, okay? Which we will get into after you get the hang of this. So once again, guys, what we're doing here is purely for educational purposes and entertainment purposes only. We're not providing you any form of signals, okay? This is not what we're doing. I recommend, because you're learning something new, you should test it out first. Smartly, you should choose a demo account to do that. All right? Okay, so how shall we actually exit? Well, the first version, which is version pivot point version 1.0, okay, which is what we're going to be talking about today, is very simple. You will basically exit, okay, when the prices reach the pivot point, okay? But now you're going to say, well, that's weird because technically speaking, we placed a sell here. So if the prices reach pivot, that basically means that I lost money. So why the heck would I do that? Okay, you're totally correct. I'm not talking about this pivot point specifically. Okay, so let's actually look back into history about how to exit. Now, this is the confusing part, but I'll try to make this as simple as possible because this is the no BS trading, which we don't want to waste time talking about the possibilities, the percentage ratios of when things happen and whatnot, right? Okay, so the whole idea is this. Right now, this is the pivot. I'm gonna just jot it down here. You see this yellow line? Okay, this is where we placed a buy, let's say. Okay, so we did a buy over here. Okay, I am not gonna exit this trade. Well, you could exit. Okay, let's talk about the pivot point exit strategy. Okay, and then we're gonna talk about all the other exiting strategies that you could apply so that you can be more profitable in your own terms. Okay, so the pivot point exiting strategy is very simple. You use the pivot point as your basis of exiting. Okay, so as long as prices are above your pivot within all these 1 hour pivot points, you maintain your buying position. Okay, you maintain the buy position. Now, when would I exit my buy position? Well, I would exit when my price actually touches my pivot point, or it actually penetrates below my pivot point at that current moment. So for example, if, let's see over here, you see prices continue to go up. All right, when did the price touch or actually penetrate my pivot point? Right over here. You see, this is a time span of how long? Here, this is platform time 6:30 all the way to platform time 9 o'clock. So we're talking about 2.5 hours. Now let's take a look. If I placed a buy and I exit over here, that already made me actually roughly 80 something points, which is 8 pips. Not bad, right, for small momentum like this. Now, prices are still above. So the second time I'm going to enter into a potential buy, we're looking at this point. potentially. Or maybe you would have already done it here. But technically we would exit here. So not sure why you would enter again. You would probably enter on the next candle. So let's say you did a buy over here. Okay, when would you exit? Well, you would exit when the pivot point at that current time frame has had a candle penetrate below it. So this would be your exit point. This where my mouse is circling. Okay, this position. Got it? Now, in the case that we entered into a buy here, we would have actually cashed in on a 33 pips or 337 points. Okay, it's not bad, not bad. This you see, because of the trends being so strong, there's more opportunities for us to actually make some profits off of this. You guys get it? Okay, so if this is very confusing, don't worry, I'm going to be very repetitive. Okay, I'm going to keep on repeating the basics of this strategy so that you guys get the hang of the first version, okay, the 1.0. Because only when you guys know how to enter with the most basic stuff and exit with the most basic stuff, that's when we can start elaborating and innovating the strategy. Got it? Okay. So for example, right now, okay, my prices are actually below the pivot, so I entered into a sell, okay? And then by entering into a sell, when will I exit? Well, I'm going to exit until one of my candles, let's say this is the pivot, let's say the pivot comes over here, or maybe let's say the pivot becomes over here, and then suddenly there's a candle that actually penetrates below this point, okay? Then technically speaking, I would have profited this much in terms of the pips. I've made 12 pips if this is the case. So a lot of you may ask, what do you do now? Well, let's browse the charts. Okay. Okay, another pair, tighter spread, Euro USD, something quite popular amongst a lot of traders who want to kickstart trading. Okay, so if I'm going to ask you guys, shall we enter into a buy or a sell right now? Based on now, let's take a look at H1, okay? H1 is where our pivots are, right? So this is very easy to see, right? Current price is below the pivot, then we drop it down to M15 so we can continue to observe and place the trades, okay? One more time, guys, this is not providing you guys any signals, okay? Actually, this type of trading strategy is a bit risky, more risky than what we talked about the previous weeks. Why? Because this would be a bit more fast-paced. Okay, this is much more fast-paced, and if you are someone who don't have time, this may not be for you. But if you are someone who loves the charts and you want to glue yourself to the charts all the time, then this is something that you would find fun, and this would be for you. Okay, this would be very profitable if you could actually stick in the charts constantly. Okay, so anyways, currently the price is below the pivot, so we're going to enter into a sell. Okay, simple as that. And then only when my price comes back and hits my pivot point, then that's when I'm going to exit the trade. So this is the pivot entry, and also teaching you guys the pivot exit as well. Okay, cool. That's it for today. No, I'm kidding. That's not it for today, right? But anyways, let's quickly review what we have done so far on the few days that we have traded, right? We have both the English versions happening on Thursday, these live streams of no bullshit strategy showcases on Thursdays, and then we also have the same sessions on the with the Chinese language on Monday nights. So anyways, we only done these showcases and tradings for 2 days a week, right? So far we're able to generate, okay, this is we started with a $5,000 so far with some profiting orders and some losses. Overall adds up to a $302 profit. Not bad. Okay, but of course, did we incur any losing or potentially opened orders right now in floating loss or floating profits? I don't know. Let's quickly take a look because we haven't been observing this, so it's not good. All right, so let's quickly take a look at the current stats now. Yes, we are currently with a floating loss of $150. Okay, now many of us may encounter such a thing. A lot of times, I know, guys, I'm gonna talk about mindset now. Trust me, it'll be quick. A lot of times, people hate closing orders by seeing a loss. That is foolish, okay? You have to have an exit strategy. The exit strategy is not about, okay, how much money am I willing to lose? No, that's not an exit strategy. An exit strategy is a strategy that sticks to your trading strategy when you enter it, okay? So for example, we talked about today how to enter in the pivot point strategy. We also talked about how to exit the trade with the pivot point strategy. Am I right? So that's what I mean by exit points. Okay, so in the case, right, for example, AUDJPY, remember that this was entered because we were chasing the trades with the 4-hour time frame with the RSI and stochastics overbought and oversold zones. So let's actually quickly review that. So I've already preset all of my stuff here. Am I jumping too quick? If I am, don't worry. This is still on YouTube. You guys can still watch it anytime you want. Okay, so let's actually just drop AUDJPY and let's quickly take a look. So a bonus for you guys here, take a look. This is D1, right? We always want to check out D1. Okay, so D1, how we are going to enter into a buy or a sell with our previous strategy is by checking out the overbought zones. So for example, if my stochastics is on the overbought zone, which is above 80, and RSI is going to be above 70, then that will be a great time frame for me to enter into a sell order. Okay. A lot of people don't like utilizing the D1 time frame. They don't have the patience for it, and then they end up wanting to actually enter more trades. Then that's when we had the second version by showcasing by dropping the time frame from D1 to H4. Okay, which increases your risk. One more time. Higher time frames have higher accuracy in the technical analysis. Okay, lower time frame, there will be more faults on the technical analysis because of fake out signals. Got it? Okay. I will repeat this one more time. So longer time frame means potentially a bit safer because less fake outs. Shorter time frame potentially means higher risk. Why? Because more fake outs. Okay? Fake outs or fake signals means a signal that is fake for you to enter into a buy or a sell. Done. Done with the explanation. Let's quickly take a look. So with H4, we were chasing the trades over here. I don't know if you guys can see that. See over here, okay? It's a bit laggy, I'm told. Okay, so right over here, right, we actually lost our opportunity to place a sell. So then what happened was during our training, then we actually entered on the second higher point of this pair, which is over here, where we entered into a sell on the 16, which is over here then, I guess. Okay, great. So anyways, how to exit this strategy is that we have to wait for the RSI on the 1-hour chart to reach the low level 30, then we exit the trade. Obviously that hasn't happened. You see, we got one signal that we missed, so we chased it and we placed it. And then over here, okay, this is where the secondary signal showed up because the RSI and the stochastics are near or actually on the overbought zone. So then we actually entered into a secondary trade and then third trade. And then our fourth trade was over here, which is where the RSI and the stochastics were all on the overbought. So we entered into another sell. Now, what should we do? Should we can all the trades out or should we actually enter into a new trade? Right? This is the decision that a lot of traders will be facing on a daily basis, especially if you're in losses. So for example, right now, we have AUD JPY with 4 trades, all in negatives. So what do we do? Okay, with our previous lesson, what we said is that do not increase the lot size. So without increasing the lot size, you have to stick to the plan. Exit only when the H1 reaches the RSI level down below, which is 30, right? Now, we could actually take a look at what is our margin level, how much capital we have, what is the floating loss. If we deem that it's viable and we want to take a bit of risk, then by all means, you can actually increase your lot size. Okay? By increasing lot size, it will be faster to chase down the profits in the case the market turns around. But by increasing lot size in the case that the market continues to be trending one side, just like what is happening with AUDJPY, it is not recommended. Okay, so we've entered into a 0.05 and then we actually started increasing to 0.1. So with our fifth trade, we're going to maintain the lot size, okay, as 0.01 lots. So let's actually do this. Now, why do we do that? Actually, it's just because even on our D1, it's giving us a nice signal here. You see D1 is getting close to the overbought, and then H4 is also right at the overbought zones. Okay, it's a bit early for me to enter into a sell, but since we're on this today just to showcase, I will show it to you guys. Okay, one more time. I'm only doing this as educational purposes and entertainment purposes only. Okay, so enter into a sell. You see, with the amount of capital we have, we can do this. It's not that risky, okay? Because look, we have $5,302 versus a negative like 150 or 145 now, right? So this is not that bad. Okay, great. So as we have talked, I think there was another 15-minute candle that has just passed on our pivot point strategy. Great, so all in all is that to stick with our previous strategies, we will make sure to maintain the positions right now, okay? In the case that the H1 on AUDJPY will actually reach down to the 30 level, then we will exit all the trades. No question is asked, okay? We don't care if it's in losses, if it's in profits, or even if it's just break even. We will exit because that is the exit plan for the strategy, okay? Cool. So that's how you stick to a plan. Alrighty. Okay. What else? Euro CAD. Let's quickly take a look. Let's review. How do we enter into this trade? I don't remember. So, note to self and note to all. Always keep a journal, a trading journal. This sounds very cliche, okay? Every trader says this, every teacher says this, but let me tell you something. Everyone who preaches it probably doesn't even do it. But it's an honest advice, okay, that you do keep a trading journal. It would be very helpful. Okay, so we entered into a buy, and why was this? Were we chasing something here? Oh, hey, look, it's not a buy, right? If it's really based on our pivot point strategy, right? Ah, look, and we missed the opportunity. We could have made a profit of 359 points. Oh well. Do we have a better opportunity now? Not really. Already. Cool. So why did we enter? Was it because of the pivot points? Oh, it might have been. I think it was the pivot point showcase. Okay, so in the case that we don't know what's going on, let's quickly analyze the market. Okay, I'm sure a lot of traders would actually have the same problem as us. They will have a lot of the same problem as us. Maybe they'll enter into a trade and then don't even know what has happened. So anyways, right now, based on our pivots, okay, it's telling us to do a buy, but no way that you will actually be able to chase all that. But hey, why don't we actually utilize our strategy and to see if it's on the right direction? Why not? Cool. So 0. Oh, wait. Right. This is a bit of a bonus for you guys. Okay. Whenever you want to actually increase some lot size, or sorry, another trade, highly recommend that you always maintain the same lot size. Okay. It is always the best outcome because once the signals actually give you an exit signal, usually you'll be in a profitable zone. Okay, so um, right over here, pivot point indicates a potential buy. Let's double check RSI and stochastics. No. Okay, so overall the trend is still going upwards, but our 4-hour is indicating a potential downwards turn, right? Prices has moved below the MA line, so there's a bit of a risk. But of course, overall the trend direction is still bullish. Cool. So possibly still will continue to go up. All right. So the chances of it reaching a bit higher is still there, as right now all the prices are also above the MA line, which we'll talk more in detail in the future about a set strategy for this. Okay. So what should we do? Should we can it out? Should we enter it? Well, let me tell you something. Um, if I'm gonna enter into my pivot point strategy, okay, so let's take a look at the pivot point. Sorry, uh, EURCAD, right? Okay, let me put it here. EURCAD, done. Cool. So based on pivot point, it's supposed to be a buy. Okay, so we will enter with a buy order. Great. Okay, now when shall I exit? Okay, so we have to talk about back to what we are learning today. Okay, our strategy for the exit is actually to exit when the price reaches the pivot point. It may not be this specific pivot point. It has to be my next pivot point. Understood? Okay. All right. Something a bit more trendy will always be the best option for this strategy. Great. So for example, like this, you see, ooh, this one, AUD USD, H1, you see everything is all down, okay? And then M15, okay, great. So basically this could be a sell. Well, technically speaking, if we place a sell over here, we would have been a lot more profitable about 15 minutes ago. Okay. Okay, so anyways, there's going to be a new candle that's happening. So potentially, ooh, I would want to enter into a sell, but I want to wait a little bit because usually this is what happens. A huge candle happens, they're going to have a bit of a retracement, enter into the retracement so then we don't lose out too much. Doesn't seem the retracement's pushing it higher. Wow, okay, great. Well, we should have entered into a sell. Okay, you see it's possibly retracing. Let's take a look at the next 15-minute candle, see what happens. This is a bit late on my entry, but anyways, the next minute, which is 8:45, you see in 15 seconds. Oh, sorry, right now this is not 8:45, it's platform time 2:44. So 2:45 is going to happen soon. You see it's retracing. Let's enter on the next candle. Cool, and we just place a sell. Done. It's not much of a difference. Okay, and then, so quick review, quick recap, right? How do you exit when you are already in these trades? Okay, pivot point entry, enter when your pivot point, when your price is below the pivot point, you enter into a sell. In the case that the pivot point and the prices are above it, then you are able to enter into a buy. And how do you exit the strategy? Well, you have to exit when it reaches the pivot. It's not your current pivot, it's the pivots that will happen in the future. Okay, so we can't showcase how to exit that right now just because we have to wait like multiple 15 minutes, but it will be worth it, trust me. We'll be keeping an eye on these trades that we've entered, and hopefully it will turn out to be better than expected. Okay, so let's quickly review. Okay, it's a bit laggy. All right, great. You see, AUDJPY. Whoa, perfect. See, AUDJPY, because